Welcome back. I'm joined by Ohad Lederer. He's an analyst at Veritas Investment Research. We've just finished talking about the banks, which he covers. He also follows real estate in Canada, and of course the two stories are intertwined. The mortgage profits from the banks didn't really get compressed the way a lot of people thought they would. What do you think lies ahead for housing prices of housing in 2014?
Well, I've been bearish on housing for a while. The question is, you never know when. Anybody can look at the market, as I alluded to before the break, anybody can look at the market and see that on any measure, real house prices, price to income, price to rent, housing in Canada is very expensive. In some cases, it's a couple standard deviations off the mean. And so it's very expensive. The question is, how long can this persist? And that's where you start talking about all the various forces in the economy that make this a complex and interesting story. You get interest rates, you have a very strong labor market in Canada. And so I think house prices will eventually drop. I think I don't foresee a U.S.-style housing crash where there's going to be a large overshoot, but I do think house prices are going to have to drop. It's unsustainable to have forever increases in both household debt and house prices, and so I don't know if it's going to happen in 2014, but I do believe it's going to happen.
And what about the condo market? You've recently issued a report on the condo market. The construction never seems to stop in this city. I know they're big in Montreal and Vancouver as well. How is the condo market different? Is it more overheated, for instance, than the market for single-family homes?
Well, we look at the condo market not only because it may or may not be more overheated, but that's where supply is so able to expand faster, because frankly they're not making any more land, but you can put up a condo almost anywhere. And as anybody who walks around Toronto and some other cities can see, but especially here in Toronto, there is no shortage of supply coming on stream. So we've looked at the market. We are concerned that it may be a catalyst for the broader house market. We often get asked, how can you be bears on the housing market as long as interest rates stay low? And what we're concerned about is the oversupply in the condo market could have a spillover, a second or third order impact into the overall economy if you have too much overinvestment, and that's what we're concerned about.
Returning to the banks briefly, some of the banks during 2013 told the market what their condo exposure was, because there had been some concerns. Jim Flaherty, the finance minister, has spoken about the condo market. How do the banks figure into this condo boom?
Yeah, the good news is the banks don't have a lot of direct exposure to condo construction. It doesn't look like it's more than call it 8 to 10 billion. It's a little hard to say because the banks have told us what's on their balance sheet, but they haven't told us, other than CIBC, what they've committed to lend. And so that's why the number is a little inexact, but it doesn't look huge. It's not going to bring down the Canadian banks. It's not going to result in huge write-offs like in the early 90s when the banks had outsized exposures to Olympia and York, etc. The banks do have tens of billions of dollars. About 10% of their mortgage portfolios are to condos. But again, the biggest problem isn't going to be the banks, it's going to be the bank's customers. If condos get hit hard, bank customers, Canadians, have got a lot of equity tied up in condos, both as owner-occupants, but especially, or perhaps especially as investors. Amateur landlords are rampant in the condo space, and so that's why we're concerned about the second and third order impact.
I was going to ask about your phrase, amateur landlords. When I pass by these big towers in Toronto, I often wonder how many people own those units, how many are being rented out by people who bought them. What are the most recent numbers telling us on the proportion of condo units rented out by owners?
There are no numbers. And that's one of the things Minister Flaherty tried to get last year, or perhaps it was the year before. He tried to have a rigorous, statistically sound method to get those numbers, and the condo industry told him where to go. Basically, there are no numbers. Anecdotally, 50 to 60% of the condos that are going up are being sold not to owner-occupants, but to some investors. Within investors, you can then split that down even further. You've got foreign investors that you hear about anecdotally, and then you've got domestic investors. We're most concerned about the latter, people that might be choosing to invest in the condo market rather than in other markets. And you know, this is why we look very closely at things like the rental market to see how their investments are going to hold up.
What conclusions did your report draw on condo prices? Are condo prices behaving irrationally at this point?
Our conclusion is that condo prices are quite high relative to rents. I don't want to make an absolute statement that says the market is irrational. What I would say is that somebody buying a condo today and renting it out today, they're earning a very poor return on their funds. They're not making what I would consider a very good investment decision.
Because they paid so much for the realistic flow of rental income they can expect.
Exactly. Any real estate investor ought to be looking at a measure called the unlevered cap rate. That's just one measure out of many, but it's an important one because it basically just says, what's my income over my price? And then that's not your final rate of return. You can obviously do things with leverage around that, but that tells you that's a good indication of what's my rate of return going to be, and you should compare that against your other possible investments. So what we found is that most investors are getting unlevered cap rates of 3.5%, 4%. You could get a unit of a REIT that has the same underlying asset and do better. You could get a bank stock and get a 4% dividend yield. So these are very poor returns, and so what the ultimate concern is when the bank's investors are making bad decisions down the road, that could hurt the banks. But it could certainly hurt the bank investors sooner.
That's interesting stuff. I'm glad you came by to chat with us. I'm glad we had a bit of an extended stretch with you this morning.
You're welcome.
That was Ohad Lederer. He's analyst at Veritas Investment Research, speaking to us about the banks, housing prices, and in particular the Canadian condo market.